Following yesterday's budget on the 17th of November 2022, I'm recording this video to just give you my thoughts on it, tell you some of the good news that came out of it, also explain some of the bad news that came out of it. It was definitely a budget where we saw tax increase. I think that tax is reported to be going up to the highest level it has been. But there was a silver lining for some businesses. I'm going to start with that. So the non-domestic rate relief that's available to businesses in the retail, leisure and hospitality industries, well, that's going to increase from 50% rate relief to 75% rate relief. This is up to a threshold of £110,000. So for businesses in that sector, there is a little bit of a silver lining from this budget. There are some opportunities for us to make decisions now that will change the tax that we pay. So I'll talk through those in a bit as well. But before doing so, let's look at the bad news. On the surface, it might seem that the rates of tax have not increased, and surely that's a good thing. The basic rate of income tax is staying at 20%, the higher rate at 40%, and the additional rate at 45%. But what has changed, or not changed, is the thresholds. So the point at which you start paying 20% tax is staying at £12,570. But what we're likely to see over the next year is people's incomes increasing. For example, national living wage is set to increase in April. So the amount people are earning is going up and the threshold is not moving. And so there are people who were not paying tax before who are going to find that they are paying more tax on their earnings because they are earning more. This is the way that we are going to end up paying more tax because of this budget. There's also another group of people who will end up paying more because of a threshold that has reduced. The additional rate threshold, and this is the point that you start paying 45% tax on your income. Well, that's reducing from £150,000 to £125,140. This means that there's an extra 25-odd thousand pounds that is going to be taxed at the additional rate. If you are in the fortunate position where you're able to determine when you work and therefore when you are earning the income and when it will be taxed, there's possibly something to be said for planning ahead. Well, I mean, there's definitely something to be said for planning ahead if you are earning between the £100,000 and the £150,000 a year mark, because the year that you earn that income will impact the tax that you're paying. So that's the threshold that's reducing, but it's not the only threshold that is reducing. Over the coming years, we will also see reductions to some of the other kind of tax-free amounts that we've been given. An example of this is the employment allowance. Every business gets the first £5,000 of employment allowance knocked off their bill at the moment. That's staying as it is at the moment, but it will be reduced over the coming years. It's not the only one. For personal income tax, we're going to see the £2,000 dividend allowance. This gives people £2,000 of tax-free dividends every tax year. That is also set to be reduced in the future. And also capital gains tax. The amount that we get tax-free here is also going to reduce quite dramatically. In fact, it's going to almost half, and then it will reduce again further in the coming years to the point that where people were enjoying a good amount of tax-free capital gains, they will see that if they are making the gain in the future, that there will be more tax to pay. With this in mind, again, a planning point is that maybe if you can control when you sell your assets and you're conscious of the tax that you will pay on that, you might see whether you could sell before the end of the tax year to be able to make best use of the tax-free allowance that we have at the moment. Another one that's changing is that electric cars are going to start getting taxed as well. Not immediately, 2025 this one's coming in, but we are seeing a lot of tax-free allowances being removed. And this is the way that the tax is increasing without changing the headline rates of tax that we're paying. I'd like to finish this video with an opportunity, and this is an opportunity for any business that is involved in research and development. If you're involved in research and development, there is a tax credit available to you that massively reduces the amount of corporation tax that you're paying. The advantage that small businesses are currently enjoying is also set to be reduced. And so there is something to be said for accelerating your research and development programs, getting as much done as possible at the moment whilst the rates are as generous as they are, before those rates are reduced in the future. The planning opportunities that come out of this budget really do surround timing of when you earn money and when you spend money. If you're concerned that you might be one of the businesses or individuals that will be impacted significantly by the budget, please do get in touch with me or any member of the team and we'll talk you through the impact that it's likely to have for you.